To markets news now, Asian stocks edged up on Friday drawing support from unexpectedly strong growth in China's economy at the end of last year, although gains were limited by caution ahead of Donald Trump's inauguration as U.S. president next week. Japanese equities struggled, though, with the Nikkei on course for a third straight losing week after the yen popped to a one-month high amid rising bets of an imminent Bank of Japan rate hike. The Shanghai Composite Index gained 0.4%, while the Hong Kong benchmark Hang Seng added 0.2%, and the Nikkei lost 0.4% to hit a new one-month low. U.S. stocks were red across the board, reversing prior session positive trade, while investors eyed the most recent corporate earnings and gauged economic data to determine the path of Federal Reserve rate cuts. Consumer spending remains strong, while the labor market is also on solid footing, giving the Fed's cushion to keep a slow pace in cutting interest rates this year. The S&P 500 fell 0.2%, the composite slid 0.9%, while the Dow Jones Industrial Average fell 0.2% to 43,153 points. Tado Mashiho is going to be our market commentator, but before that, we are going to look at the markets here at home. The HSE is in positive territory with the all-share index climbing 1% to 84,507. Look at the currencies. The rand is currently trading at 18.73. The euro is at 19.29, and to the British pound is at 22.85. And another quick look looking at our commodities. Gold is currently trading at 2,704. The platinum is at 936. It's up, and Brent crude oil is down again at $80.50 for Brent crude oil for a barrel of that. As I said, Teto Mashiho is now joining us from Sanlam Investments, and he's our markets commentator for today. Tato, thank you so much for joining us and being our market commentator for today. China's GDP coming out, but there's still some fears about next week's inauguration of U.S. President Donald Trump happening on next week. I believe it's Monday or Tuesday. How do these two collide, and how does it have an impact on China's GDP and eventually on us?
Good afternoon, Diabo. I think the GDP numbers were well received, ahead of market expectations for the fourth quarter of 2024. So that came in at 5.4%. I think the market was looking for 5.0%. What that means, of course, is that the overall target for the year came in at 5.0%. So one can surmise that the Chinese government, through stimulus and government spending in the last quarter, managed to achieve their overall target for the year. But as you rightly point out, there is some hesitancy with the inauguration of the U.S. president next week, and what that might mean for tariffs being imposed on China. He has, of course, said he has raised figures as high as 60%. People are expecting somewhere around 10%. But either way, it would be very negative for Chinese exports. And of course, exports still remain a large part of the Chinese economy and the growth story.
Yeah, we've been monitoring the Brent crude oil in the commodity side as well as the gold price. The gold movement. Is there a reason to worry about the direction that Brent crude oil is taking now, hovering at around 80? And I think it was yesterday where it went a tad up to $81 per barrel. Do we have a reason to worry?
I suppose it goes again to your earlier allusion to the new U.S. administration. There have been a number of supply disruptions in the oil market from the incumbent Biden administration, and the recent jump up in oil due to sanctions or new sanctions being imposed on Russian oil tankers. So that obviously drives up freight rates and impacts from the demand side. So it hasn't so much been higher demand from the economy and from businesses and consumers, but we have seen a lot of supply chain disruptions from a geopolitical perspective. And whether or not that continues, we have to wait and see what President Trump will do.
Yeah, gold always seen as a safe haven, and it's been doing relatively well these days. What's leading to the strength?
Well, gold had a very strong year last year, and I think that may continue as we move into 2025. On the one hand, people are, or the market is hoping for lower inflation, and we did see some positive news on that. So there could be lower interest rates. But I think more longer term and more important, perhaps, is investors' desire for a safe haven, a store of value, especially in volatile and turbulent times. If we look at what is happening with most global currencies in terms of monetary inflation and printing, and of course the deficits we see in the US government, people are starting to look towards tangible assets like gold as more of a store of value in that sense.
Yeah. Tato, and as we conclude, next week we are looking forward to the World Economic Forum, and South Africa is quite confident about the story that they're taking this time around, Team South Africa that is. How do you see that this time around South Africa going to the World Economic Forum and the benefit thereof?
I think it's positive that the president himself will be attending. So it will be the first time in a few years that the head of state from South Africa will be leading the delegation. This is an important signal to international partners, whether it be other countries or investors or large multinational businesses, that South Africa does intend to attract investment and to collaborate on various projects. Of course, we know that there are challenges in terms of improving growth. The IMF is forecasting, 1.5% in the medium term for South Africa, whereas we know that government and the business community are looking for 3%. So that will come with some challenges, but we have seen positives. For instance, electricity supply has significantly improved, and we hope that we'll continue to see improvement in consumer spending. But when it comes to infrastructure, logistics, unemployment, these are problems which, of course, have to be tackled. And I would imagine that there will be a strong message to the international community on some of these initiatives.
Tato, thank you so much for dissecting the markets for us. Of course, next week we're also going to be looking at some data coming out. Among that is the Consumer Price Index, the CPI, that is coming out next week, as well as retail sales figures and other data that will give us direction of where the economy is heading. Tato Mashego is with Sandam Investments, and he was our market commentator for today. We're going to take a break for now. When we come back, I'll have more news for you.